May profits be upon you. Welcome to another weekly Forex forecast looking at the Euro USD. The Euro USD. Now, first thing we're going to look at is the economic calendar, the one day that's going to have a huge impact. Besides the fact that Monday and Wednesday there are no red folders, those are the days you want to either you lay back and don't do any trading, all right, because things can get a little wonky when there's no volume in the markets, or be extra careful. Friday is the big one. Core PCE. This is the preferred measure of inflation by the Fed here in the U.S. And if the numbers come in higher than expected, then the U.S. dollar is going to go up. The opposite will hold true. If the numbers come in lower than expected, the U.S. dollar will continue down at it as it has started already last week, with Jerome Powell talking very dovish about the rate cut that is looming. All right, 75% or so of the market there's that they think that those rate cuts are coming. 76% chance that those rate cuts are coming, or at least one. Anyway, they're baking the numbers in. We'll see. But let's look at the monthly time frame on the euro. This is going to be exactly the opposite and a lot shorter than the U.S. dollar forecast I gave just the last I just posted that one just minutes ago. Now, what we can see is we are heading down, right? You can see the market has been bearish for quite some time, making lower lows, lower highs, lower lows, and this could be the next lower high for the next lower low. We are still in correction territory. What do I mean by that? From this high to this low is our bearish leg, all right? And it broke structure. That means we are bearish, all right? When you have an impulsive leg, you look for the correction, impulse correction, right? And the correction has gone up here, all right? People are saying, oh, well, this was the correction, and then we came down and we're heading up. Well, let's not be too fast. Not so fast, young man. What happens is, if you put your Fibonacci retracement tool on this, you can see that we're right at the last rung on that ladder, 786. All right. You saw the reaction of it during July. All right. July was a bearish move. We came up in June. We thought, yeah, we're probably going to go to the moon. All right. And then July came. Gave us a reality check. This could be the start of the pullback. All right. Where is this arrow coming from? Anyway, so being that we're at that 786 mark, and you see how price pulled back to it. If we see closures past that high, past the July high, you can book it that we're probably going to trade towards this swing high. All right, but that hasn't happened yet. All right. And I want you to also look at the fact that if we come in, zero in a little bit, if you put that Fibonacci retracement tool on the body of the candle for July, you can see we've come past it, peaked past it, and we're right now respecting that the 786 right now, showing a little respect to it. We haven't, once we break these highs here, then you can be rest assured we're probably going to go towards those highs, but that hasn't happened yet. And so right now, there's no reason to take shorts. There's no reason to take shorts yet. All right. There's no reason to take shorts until we see a break of market structure to the downside. On the monthly, that would be a break below this candle, a break and close below that candle. All right. Before we start taking shorts on the monthly. All right. Right now, it's bullish. Buys are what's happening. All right. But just understand that we are still in corrective territory when it comes to the swing high and the swing low. Everything that happens in between is a bunch of noise. All right. We may get some internal breaks of market structure. Yeah, we can say we're bullish here for sure. You can say that. All right. But we are still in the correction of this impulsive bearish movement. Let's go to the daily, to the weekly. All right. I'm not going to stay too long on that monthly. I don't know why this is taking so long. Hello. That's disgusting. Anyway, on the weekly, let's take a look at these candles. Let me zero in on them. All right. This is the most recent price action. All right. I want you to see that if you're using next candle theory, all right, you want to see a close above the previous candle, so that you can say, okay, the next candle after that will probably be bullish. All right. What happened? What happens? All right. We have a bullish candle here. We close above the high of the previous candle. All right. And you're thinking, okay, I'm thinking, yeah, we're probably going to trade towards this high. Price opens, we gap up, we move up towards that high, and it comes down. It comes down and closes below that low. All right, great. I'm looking for bearish candles after that. That's it. I'm looking for a price to trade towards this low. But because we have such a large wick, I'm looking for that 50% to be respected by the next candle after it. All right, because the wick is bigger than the body, and you want to see that. You don't want to see a closure past that 50% of that wick. Well, price gives us an inside bar, and you see that it did not go past the 50%. All right, and we closed bullish, and it did not take out that high, didn't take out that low. It's an inside bar. It's an inside bar, and but we respected that low. The next candle, I'm looking for a price to trade towards that high. The next candle does trade towards that high. We take out that high, and we closed above it. We closed above that high. So I'm expecting the candle after that to do the exact same thing. Trade towards this high, maybe get a closure over it. Okay, we got half of it. It did trade towards that high, but it came down and closed back within the range of this candle. All right, we can see when that happens, it means all we did was sweep the high. We rated the high, but we didn't trade through the high. There was no follow through, no intent to go higher. So what does it mean? The next candle, am I expecting us to trade towards that high? I am not. All right. I think there's a higher probability because of the way this candle closed that we'll probably be trading more towards the middle of this, the consummate encroachment of the wick on that candle, because the wick is so much bigger than the body. You got it? All right. So this is how you figure out your bias. All right. If it doesn't close past the high of the previous candle, there's a good chance, like this one. This one closed past the high, but this was the swing high. We got to look left to see, why did it stop here? Why did it stop here? I'm not, I don't want to get too far. We are closing above the highs of the swing high, and we moved up. It was time for a pullback, and we got that pullback. We see price rebounded. We see how these candles are closing. Yeah, and this one, the market is bullish, but this isn't a bullish sign. That's what I'm pointing out. That's the only thing I'm pointing out. That's a bearish sign. We may be looking at consolidation, and then I want you to look at the bodies of these candles. This high. This is a weekly chart now. This high and these lows. All right. Let's even go here. Just in the last several candles within the last couple of weeks. All right. we're in consolidation. All right. And when price closes back within, that means either consolidation or we're going to be trading towards these lows. All right. So I just want to point that out. Yeah. Overall, this is bullish. All right. 1, 2, 3, 4, 5. With that's 5 waves up, isn't it? And we had a bullish break of market structure. So I'm looking for correction. I'm looking for correction to this move up. That's what I'm looking for. All right. Am I looking for immediate correction all the way down? Am I looking for sells? No, we don't look for sells until we get a break of market structure to the downside. Period. All right. Right now we are bullish, and buys are the best thing to look for. Wait for a pullback and then get into a buy. That's it. All right. But be mindful where we are in the structure, where we are price action wise. All right. This is on the daily. You see this big candle happened on Friday. All right. And you can see that we are closing right at the highs here. All right. We didn't take out the swing high. All right. The intermediate swing high. We didn't take that out. All right. We did not take it out. We rated it. We rated it for liquidity. Certainly did. But we did not close past it. We didn't trade through it. That gives me a little bit of pause. That's all I'm saying. That's all I'm saying. We are in, you see how price took over this bearish fair value gap there. All right. We just kept pulling into it. I'm not even considering it now. It's about the highs and lows right now. All right. Yes. I think there's a higher probability chance that we're heading towards that high versus this low. If I can just get my life straight. All right. Yeah. Right. I think there's a higher probability that we're going higher. All right. But just understand that we are in corrective territory. Look at this high. Look at this high here. We made a low, a lower high, a lower low. All right. We're still in lower high territory. And it could happen here. I'm just saying be mindful of that. Until we see a break of market structure, which I would need to see. Which I would need to see this break. All right. I would need to see price pull past that with a breaking close on a daily closing basis before I look for a pullback for sells. All right. I need to see that crack first. I need to see a break of market structure, a bearish break of market structure before I start to look for sells. But right now, sells could happen. I'm just saying. That's all I'm saying. Right now, bullish. Look for a bullish, a small candle to happen on Monday that would give us a bullish fair value gap. Price could use that to go up higher. That's all I'm saying. Got it? Good. I don't need to go any further. Hey, thank you for checking in and being with me on every Sunday for my forecast. The next one will be the pound USD. The very next video will be in the pound USD, and I hope to see you there. Thank you for watching.